Hi, let's talk about Clovis Oncology. It's a biopharma technical company that focuses on acquiring, developing, and commercializing anti-cancer agents in the United States, Europe, and internationally. Market cap is 554 million. It's trading based on previous day close 91% below the site's estimated fair valuation. Revenues forecasted to grow over 25%, and there's a bunch of risks that Simple Wall Street finds: negative shareholder equity, currently unprofitable, not forecasted to become profitable over the next 3 years, has less than 1 year of cash runaway, shareholders have been diluted in the past year. And actually, if we look at the latest share price and events that they had, there was very much of the product updates. And if we turn up the slide to the BioPharma catalyst, we see a bunch of, so they have pretty long drug pipeline that they have, and actually there's many products and a few of them are approved. So yeah, 3 of them is approved, and there's one on the serial side, so it's they're waiting for the letter, and it's usually sold within 7 months up to 14 months. And there's on the phase 1, phase 2, phase 3, and upcoming catalyst on its way, phase 3, and latest news. So there was yesterday one of the news: Clovis Oncology appoints Dr. Ronit Sinmadov to its board of directors. So there's new members of the board. Anyway, market performance lead in the 1-year return minus 16%, and if we look at the longer frames, 3-year minus 88%, 5-year minus 62%, long-term price volatility considered as highest. Valuation side, so basically the fair valuation based on Simple Wall Street should be around $60. Let's have a look on the tip ranks. It's $6, so there's a little bit more accurate, I would say that. So 30% currently upside, and 12-month forecast up to $12 per share. And on the market watch, pretty similar numbers here. So in good scenario, stock price target is $12 per share. And what about the future growth? So it's forecasted annual earning growth would be increasing by 50%, so that's a lot. And the good news is that they have the revenue already, so this is not one of the companies that is on the clinical stage. So they have revenue, but of course the research expenses are very likely high, and that is leading to the negative side of it, because the earnings are on the minus 400 million side, 413 million, but it's raising, so this is actually good. But unfortunately, it's not forecasted that they could become profitable in the next 3 years. Earnings per share growth is forecasted as well as to grow, and we might see in very good and optimistical scenarios that in the end of 2023 we could see the EPS above the 0, which is very good. Past performance, historical annual earning growth decreased by 0.2%. So pretty volatile earnings, I would say that, and revenue is likely to increase. Financial health side, so does they have the depth? Yeah, so this is actually a very serious situation. I didn't know about that. The cash level is decreasing. Equity is on the negative side, so they have negative shareholder equity, which is more a serious situation than the high level of depth, but they have also the high level of depth. So This is not a very good combo. If we look at the stock, for example, 1 year, 5-year frame, and max. So yeah, they had pretty much better years, and for those who invested, for example, 2017 in July, yeah, they're sitting in the 94% minus. Yeah, there's another one drop over 70% in the few days. So this is actually things that could happen in the biotech companies, not specifically on this, but anyway on any kind of biotech, or pretty much on any company. So that's why the level of diversification is needed. Balance sheet looks one of the sides is green and liability side red. So pretty serious situation, because they are not, this is red basically based on the equity, which is on the negative side. So if they would have some of the equity, it would be showing a little bit green. They're not paying dividends, and insider volumes, so ownership, yeah, there's insider that is selling. Ownership breakdown: institutions holding 49%, general public 48%, insiders less than 2%. Top shareholders, so surprisingly there's companies investing, so mostly I see green here. Top 6 is increasing: BlackRock 14%, Vanguard 19%, and they, yeah, last reporting holding date 31st of March. 31st of March, the price were at around here, so basically minus 24. So I think there is potential coming if this kind of the drug pipelines move on, and they improve of the sales in the approved drugs and so on. And we should take a look at this slide. So Finvish shows that it's long term it's going down, and long term, midterm, there's a upside that is showing here. The volumes are, yeah, around 80 million. They had this peak on the volume side, 300 million. Back in March 19th. Simple Safe dividends shows that shares outstanding keep increasing, but so on total sales. So pretty much not so bad situation, I would say that. So many of the companies that I research are highly volatile. So on this one, but many of the companies have the situation where shares outstanding keep significantly increasing and total sales are decreasing. So that would be more serious situation than this. And anyway, investing.com summarizing the stock for long-term investors as a strong sell. Thanks for watching this thanks for watching this video. Subscribe to the channel, like the video, and see you in the future one.